Rakesh Jhunjhunwala, often called India's Warren Buffett, always emphasized one core principle: buy businesses, not just stocks. Instead of getting distracted by daily price swings, he focused on the underlying fundamentals of a company. He looked for businesses with a large addressable market, a strong competitive advantage, what's often called a moat, capable and honest management, and predictable earning power. This approach helped him filter out the noise and zero in on companies that could truly stand the test of time. By treating every investment as a stake in a real business, Jhunjhunwala set the foundation for long-term wealth creation. Jhunjhunwala's philosophy was clear: real wealth is built over decades, not days. He famously held onto his winning investments for 10 to 20 years, allowing compounding to work its magic. According to him, the big money is made by riding big trends and letting time do the heavy lifting. This required conviction and patience, resisting the urge to cash out at the first sign of profit. By staying invested in quality businesses, he benefited from the exponential growth that only time can deliver. His approach reminds us that patience is not just a virtue, but a powerful investment strategy. Another key to Jhunjhunwala's success was his focus on sectors with massive growth potential. He looked for industries that could expand regardless of economic cycles, like consumption, financial services, pharma, technology, and infrastructure. By identifying scalable businesses in these sectors, he positioned himself to benefit from India's long-term growth story. This forward-thinking approach meant he was always on the lookout for the next big opportunity, ensuring his portfolio was filled with companies ready to ride the wave of progress. Jhunjhunwala was a true contrarian. He believed in buying when others were fearful and pessimism was high. This value-driven mindset meant he often picked up quality businesses at bargain prices, taking advantage of market overreactions. He also knew when to sell when optimism became excessive and prices soared beyond reason. This approach, similar to Warren Buffett's famous advice, was applied with even more aggression. By going against the crowd, Jhunjhunwala found opportunities where others saw only risk. Like many investors who spread their bets thin, Jhunjhunwala invested with high conviction. When he believed in an idea, he backed it strongly, often taking concentrated positions. But this confidence was always built on deep research and understanding. He didn't diversify for the sake of it; instead, he put his money where his research led him. This approach amplified his returns when he was right, but also required the courage to accept mistakes and move on when necessary. Jhunjhunwala often reminded investors not to obsess over daily market movements. He famously compared markets to women, always commanding and mysterious. His point was simple: don't let volatility shake your confidence. Instead, focus on the long-term earnings growth of your investments. By ignoring the noise and resisting emotional reactions, you can stay committed to your strategy and avoid costly mistakes driven by short-term thinking. Jhunjhunwala, successful investing was both an art and a science. He combined rigorous fundamental analysis, studying earnings, cash flows, and industry trends, with real-world intuition. He constantly asked, "Where will India be in 10 years?" This blend of data and vision allowed him to spot opportunities that others missed. By betting on India's long-term growth and trusting his instincts, he stayed ahead of the curve. Jhunjhunwala understood that mistakes are part of the investing journey. He believed the biggest risk was not taking any risk at all, but he also knew when to admit he was wrong. If the facts changed, he wasn't afraid to exit losing positions quickly. This discipline protected his capital and allowed him to redeploy funds into better opportunities. By accepting mistakes and cutting losses, he ensured that setbacks never turned into disaster. Continuous learning was at the heart of Jhunjhunwala's approach. He read constantly, met with management teams, and was always updating his views based on new information. He believed that the market is a great teacher, offering lessons every day. By staying humble and open-minded, he kept improving as an investor, adapting to changing times and new opportunities. This mindset of lifelong learning is essential for anyone who wants to succeed in the market. To sum it all up, Rakesh Jhunjhunwala formula equals: a great business is at good prices times hold long-term times high conviction times contrarian mindset times continuous learning. This framework helped him build extraordinary wealth and can serve as a timeless guide for investors everywhere. By following these principles, anyone can lay the groundwork for lasting financial success.